My name's Dave Dubeau, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewsyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content. Hey folks, welcome back. Today our special guest is Jimena Cabrera, zooming in from beautiful southern Florida via Argentina. And Jimena is a real estate entrepreneur. She's a private money lender, and she also helps people avoid foreclosure. So I'm looking forward to that part of our conversation. Jimena, welcome to the show. Great to have you.
Thank you, Dave. Same. Thank you for having me here.
My pleasure. So, Jimena, give us a little idea of what it is that you do day to day as a real estate investor. What does that look like?
Well, I start my day trying to connect with people. That's mostly what I do because my business, it's all about networking. So that's mainly what I do. But I also try to connect with people that are going through foreclosure or are having some distress situation they need to solve. And I try to help them and see what's the best way to give that help, that support.
Okay, so let's unwrap each one of these. So the first part, it sounds like you're networking, connecting with people a lot. Is that for the private money lending side of things? And if so, is that trying to find people to lend money to, or to find people that will help you with the capital side of things for lending money, or both? Okay.
Yes,
so you're
both.
looking for capital, and you're looking for places to put that capital. Got it.
Exactly.
Now, are you typically lending on short-term type projects like flips and bridge loans and that sort of thing? Or what kind of deals are you lending on?
We do all kind of real estate investments, bridge loans, but also DSCR and loans with 30 years. So all kind of...
you do normal mortgages and the whole bit.
Yes, but only for real estate investments and commercial, not for residential.
Okay, very good. So is it almost like a little bit of a brokerage type situation there, or is it
exactly
really...
Yes.
Okay, so are you a mortgage broker as well?
I'm a mortgage broker, yes, and we also do hard money lending. Because sometimes investors that are, for example, doing a fix and flip, they have a loan in place for the 75%, but they are experienced investors, so they want also to have the other 25%. So we also offer them the first...
like the down payment.
25, yes, the down payment, the closing costs, and they have in that way
as long as there's a high enough loan to value ratio there that it makes sense.
Exactly, yes, and it has to be also an experienced investor.
Yeah, track record, very, very important. Okay, good. So that's kind of the private money lending and the mortgage side of your business. Let's talk a little bit about the helping people out in the foreclosure situation. So maybe the best way to explain this, Jimena, might be to walk us through an example. So what would be, what would your ideal pre-foreclosure client look like?
Exactly. Well, first off, we try to help them keep their homes.
Yeah.
So if they want to keep their homes, what we try to do is try to see if they have the equity in the house to have a second mortgage on it. And we also consider if they have the financial means to have a second mortgage. This is because we try to help them. And if we give a loan to a person that is not able to pay that second mortgage, it's not helping them, it's pulling them down.
Yeah.
So that's the first two things that we analyze, and we consider people that are going through foreclosure, and it's not like a behavior in them it's something like casual, something extraordinary happened in their lives, and that
like what?
ended.
Maybe give us
For
some example.
example, somebody died, or a divorce, or somebody got sick, and instead of paying the mortgage, they had to pay the medical bills, and those kind of things that made them skip a couple of payments. And once you skip a couple of payments, the bank won't let you pay monthly installments. They will ask you to pay the full amount, plus all the interest, plus all the fees, and a lot of extra things that they consider you have to pay. So since they are already recovered and they are able to pay a monthly make a monthly payment, but they don't have the 10K, 20K, 30K that the bank is obliging them to pay in full, we help them to cure that amount.
I see. So if I'm understanding you correctly, you're working with people who are on some sort of a temporary situational kind of thing. Typically, they're very good. They pay their bills, they pay their mortgage. They've got a good history of doing that. Life happened. They got off track temporarily. Big bad bank is saying, hey, you missed 6 months worth of payments, so we're going to foreclose unless you pay all of that, plus interest, plus fees, plus blah, blah, blah. And that's just too much for them to be able to catch up all in one fell swoop. That's when you guys come in and look for ways to provide solutions.
Exactly.
And typically the way that you're able to provide a solution is if there's enough equity in that property, you can give them a second mortgage, like almost a home equity line of credit, but it's actually a second mortgage.
Yes.
And do you work with the bank to get them to be more reasonable and to lower what they're looking for?
No.
No.
No, because no, it's you can negotiate some kind of fees or something, but it's not exactly what they are looking for. So what we do
they
is
want the 20 grand or whatever. And
yes. Unfortunately, it is.
Okay, so but basically you're able to loan that to the person. They pay off the bank. They get back on track. They get
we pay off the bank.
You pay off the bank, and they're paying the regular mortgage payment plus the second payment to you guys.
Exactly. Yes, not to us, but to the investor that decided to invest in that second lien.
Got it. Okay, so a couple of questions come to mind, Jimena. What's the business model around this side of things for you, helping people out of foreclosure? And what are some of the challenges with it?
Well, the other thing that we do is that we give them the loans depending on their capacity to get back to track, to have their credit score cured and being able to have a standard mortgage again and refinance their property.
Okay.
So our main goal is to help them not to get their scores a lot lower. No, we want to get them in a point that they can go again to the bank and get a traditional loan, so they can refinance these two mortgages.
I see. Okay.
Yes, and the main challenge in this business is mainly making investors understand that although they are people that they are going through foreclosure, it's not people that it's their something
like a
that
situational thing. Yeah.
Yes, and that we already analyzed the property, and we already analyzed their financial situation, and we have the situation under control, to put it in a way.
Right.
Of course, this is an investment, and again, things can happen, and there's a risk, but the risk here is having to go through foreclosure. But the money you are going to receive it because we make sure that the properties have at the top 70% loan to value. So between the first mortgage and our mortgage, there's going to be a 30% margin.
Oh, wow. Yeah. So they have to have a lot of equity in the house to qualify.
Yes. Yes. In some cases, for example, that the mortgage is the loan to value is very close, or maybe 71, 72, but the person has like a really good income and he's recovered and everything. What we also ask for is a warranty deed. So there's like another secure document for the investor. All our investments are secure with a property, and of course, there are risks, but we try to make it as clear and as secure as possible.
So for the investor on one of these foreclosure type deals, pre-foreclosure deals, what do you even call them? Yeah.
Yes, it's pre-foreclosure. Yes.
Yeah. So let's say an investor puts in $20,000. Let's say that's what it's required there. What are they usually seeing as a kind of return on their money, and what's typically the normal time frame that you're looking at ideally?
Well, generally we work with investments between 1 year and 3 years. That's the time that it takes to for people to recover and try to refinance. And sorry, what was the other question?
So yeah, that's the time frame. And what's the typical kind of interest rate the investor is getting on their money?
The investor is getting between 16 and 18% annual return. Yes.
Very high return on their investment. Okay.
Yes, it's a very risky business, and that's the reason why what we do once we have the investment in place, we also keep in touch with the borrowers, trying to make them pay on time and don't skip any payments. Try to be good so you can refinance as soon as possible. We understand.
So are these typically interest only type payments, simple interest, or is it's okay? Because I'm thinking, ooh, that's going to get kind of steep if that's amortized or anything.
Interest only, yes, interest only, and they pay when they refinance the property. They pay off when they refinance the property.
That makes sense. So it's in their interest to get that paid off as quickly as possible. So worst case, I can see why investors would be interested in this. It's very attractive kind of rates. Apparently there's a decent amount of security there, but I can also see why they'd be nervous about it, right? Because there's the stigma. Hey, if this person was irresponsible enough to get themselves into a foreclosure situation with the bank, now I'm in second position behind the bank on this property. If they stop paying me, then what? So what would just maybe explain a couple of the situations. So let's say the borrower gets the second mortgage, they keep making the bank payment, but then for some reason they stop paying the second mortgage. What's the worst? What kind of happens there? Worst case scenario.
Well, worst case scenario, you got to look for a lawyer and start the foreclosure procedure.
Which would mean you'd have to pay off the bank what's owed to them first, wouldn't you?
No.
Okay.
The bank, first, the lawyer is going to notify the bank because it's first position. And although many investors like the first position, I like the second position.
Really?
Better. Yes, because you have the bank, and the bank is going to be your policeman there. He's going to make sure that the insurance is paid, that the taxes are paid, and he's not going to be happy for the borrower not to paying the second mortgage.
Why would the bank care?
Because they don't want a property that has a second lien and it's not being paid. So you inform the bank that they are not paying, and the bank is going to start the foreclosure procedure.
Even though the first mortgage is being paid?
Yes, because it's in their best interest also. They don't want, the bank don't want that the borrower skip taxes.
Right.
So this is at the same level.
Interesting. I didn't know that.
Yes.
I
Yes.
would never have thought that. That's very, very interesting.
If you want to keep the property, yes, you can pay off the first mortgage.
Mm-hmm.
You start the process of the foreclosure, you pay the first mortgage, and you stay with the property.
Right. You take the first mortgage, you
Exactly.
evict the person, and you keep the property if you
Yes.
wanted to. And you've got
Yes.
30% cushion there if
Yes.
needed. Okay.
Yes.
So really it is pretty secure then.
Yes, it is, but the foreclosure process is not comfortable. It's not
No.
something that we all want to go through. So we try to avoid that situation.
Yeah.
We try to, we are always in touch with the borrowers, trying to avoid and trying to look for other alternatives. For example, we sometimes we had some cases that they life happened to them again.
Yeah.
Yes. And what we did is I forgot. Sorry, I missed the word in English.
Well,
They
try it in
transferred.
Spanish. I speak some Spanish.
Really? Okay.
Sí.
Se dieron el título.
So they give you they hand over title to you.
Yes, yes.
Mhm.
Yes, they transferred the title to the investor.
Mm.
And they agreed with the investor that they are going to stay in the house. They are going to pay a little bit more as a rent.
I see. And they'll
Yes.
get the title back when they have.
Once you are in a good position again, you
Yeah.
can rebuy me the house.
Interesting. Okay.
Yes.
Yeah.
That's
Well, that's
one of there are like lots of creative opportunities and ways to handle these situations. We always try to avoid foreclosure.
Yeah.
Because it's a long process, although we know that you're going to get your money back and
Yeah. It's just a pain
it's
in the butt.
secure and
Yeah.
everything. The process is not, it's ugly. You don't
Yeah.
want to go through that process.
No, definitely not. So what do you think is the biggest challenge educating potential investors about this opportunity? Just that stigma of foreclosure? Is that?
Exactly. Yes.
Yeah.
Yes. It takes me a lot of conversations to make them understand that these are people that are going through a difficult situation, but they are people that are willing to pay. And
Yeah.
of course,
And able to pay.
again,
Usually able to pay. Yeah.
of course,
Yeah.
yes, they are able to pay. And but regardless, all the previous analysis that we do, it's important to understand that the papers are talking for themselves.
Yeah.
We have all the paper security that we can have when we offer an investment. And
Yeah.
let's say that you are comparing our investment with I don't know, an Apple stock.
Yeah.
There you don't have any warranties. I know that Apple is a very secure company, but things happens.
Yeah. You don't have much. There's not much tangible. There's nothing you can go after.
No, it's a paper.
Exactly.
It's a paper.
This is a tangible asset. No, that's very, very
Exactly.
interesting, Jimena. Well, thank you very much for explaining how that works. I'm sure some of our listeners and viewers are going to want to find out more. So if somebody wants to connect with you, where can they go? How can they connect with Jimena Cabrera?
Thank you very much. Well, they can contact me through Instagram, and it's at Jimena Cabrera Official.
Perfect. Jimena, thank you very much for being on the show.
Thank you, Dave, for having me here.
All right, everybody, take care. See you on the next one. Hey there, I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewsyou.com. Now at moneypartnerformula.com, we help real estate investors to create a process for predictably getting capital so they can do more deals without relying on hard money lenders or the banks. We do this by building them a private capital marketing system. Now, if you want help turning yourself into a big money capital attraction machine, then book a call with our team to see how we can help. Just visit moneypartnerformula.com to find out more. All right, take care, and we'll see you on the next interview.